Hey guys, this is Julie. We're going to do an instructional video. This is the daily chart. I will point out that I've got some NinjaTrader indicators on here. This is the volume profile, which is not part of Jats PT. I'm just pointing out that you can put other indicators on your Jats PT chart just like you would with any other indicator that you have. You can put uh, different indicators on the same chart. I use volume profile on the daily chart as well as the Globex Open and the settlement. This is the settlement indicator, so it marks current settlement and prior settlement. You can see settlement is also a support resistance area. So the bottom is the oscillator. So we have JATS PT levels on top and the oscillator levels on the bottom. And I can mix the distributions up. The lower distribution on the oscillator, let me maximize this so you can see it, has a 14 period, and this 14 period distribution is of this 15-minute time frame. Then I have a 1 period of this 15-minute time frame on the chart as well for the oscillator. And you can see that when the overall 1 period of the chart is below the daily one, these um, horizontal lines are the JATS PT daily 1, 2, 3. You can see that you expect low volatility overall right in here. But when you pick up on top of your daily, that's when you know that the market volatility is higher and could potentially run higher to a either a daily 2 or excuse me, you would need to watch on your other time frames. Maybe you were getting a breakout as well. You can see here on the weekly time frame we got a breakout of this very low volatility in September, October, November, and December. Right around December 19th, the volatility has been breaking out, and we got that initial down move on this volatility breakout, and now we went to the 3 of the weekly 3 and bounced. We're back up to the weekly 1, which was the target reached for Friday. And you can see the volatility was elevated for that week. And plan your trades accordingly. If you're inside the monthly 1 though that we have, that's telling you that resistance is likely to be held. But like right here where it broke the 1 and went right to the 2, that shows you that you've got that extra volatility in the market and that you want to be widening your stops and targets. Same for here. You see how wide the bars got because we were above these statistical levels that the market likes to stay in. So if you're below the 1s on the monthly, your nice little bars, and you don't have to worry about swinging for the fences or anything like that. But make sure you check, are you below the weekly 1, are you below the monthly 1? Then chances are you're going to be below the daily 1, and you can be selling premium, you know short strangles and things like that with a high degree of success for those day trades, right? Sell your condors. um, Plan your trade strategies. If you are in a higher time frame breakout, then you want to be very cautious that these ones could potentially break. See, we got here on the monthly, one period broke above the quarterly two, and so that was kind of dangerous that uh, it could have potentially kept going, but they turned it around, flattened it out, and it brought it down. So just, knowing where these time periods are. So the yellow is a monthly one on top of this quarterly distribution, and their daily bars on top of the quarterly distribution. So you can make these any time frame you want. Um, but you couldn't like put a 5 minute on a quarterly distribution. It would be way too many calcs. You've got to, put your higher time frames together, and if you want to do an analysis of lower time frames, stick to the lower time frame charts. So we have points and levels, and they tell us where we are on the distributions. I have templates for you to help you set this up. But basically, in a nutshell, when you put a PT2 or a PT3 on the chart, you can select whether you want, a higher time frame, like a day, a week, a month, a minute. I don't do the other ones. Or you could select, um, uncheck that, and select a time range, like, 8:30 to 9:30, or 8:30 to 3 p.m. 1500, or 1700 to 8:30. Um, so one or the other. You can't do both at the same time. And you can put the PT2 oscillator on the chart overlapping a daily on top of a 15-minute range like this, and then put your daily bars on. So with the glance of the chart, you should be able to say, well, I'm below the daily one, so I'm not really looking for ranges to break, right? Because you need this to be above the daily one to get that extra oomph. Okay, if you're down here, it's not going anywhere. And just keep your eye on, the bell curve on these different time frames. I can scroll this back so you can see it, you know, again. So here we go. We went outside the distribution, and that's when the price breaks down. It's that simple. If you're inside the ones, there's nothing to get excited about. You're just going to be happy selling premium, using your support resistance levels. Here it tested it, got kind of wild here as it was going up in the volatility. And so just know where you are on these time frames with the 1, 2, 3s, and where you are intersecting with the means and things like that, because you can get a 4 week mean, or a 12-week mean that is different than your 30-day or 90-day or 1 month or 1 quarter. And that is often an inflection area on the chart, the middles. It can either, consolidate there, or it can move off of it. They move off of these high gamma spots whenever you get the options around its mean, because that's where they sell the gamma and get the most premium for it. So they sell gamma, and that becomes an inflection point around the means. So we want to keep our eye on the implied volatility means. We want to keep our eye on what the gamma is doing, whether it's positive or negative, because that can have an impact on how the dealer interacts with its hedging if it hedges even at all. Sometimes it will participate with the market flow. Um, and just know where these other levels are at all times. We can break this down on a lower time frame, like a 1 minute chart. So let me show you that. Put up ES, and I'm going to change my template to none, and then change this to minute. And we want to do a 300 minute. And let me, oops, I didn't do that right. I'm sorry. Hang on 1 second. Sometimes I don't know what is wrong with me. So I want to make my background black. And no way do I want 300-minute bars. I want a 1 minute bar. Sorry. I want to put the 300-minute distribution on the chart. Okay, come on. All right. So you can see how this is used a lot of the time for support resistance. And a lot of the times it will break out of that range and run. So what we do is we add tails. Okay, because the market will likely trade to a measured move up or down from that level. Let me put this on 5 minutes so it's easier to see. So you can see here it went 3 times the range. So one time, 1.5, 2, 2.5, 3. So this is a really good template to use for day trading. It's sort of like the intraday time period. We can add the 60-minute chart, 60-minute distribution to this. And likewise, we're going to add tails. All right. So here's the 60-minute inside that 300-minute. And you've got a really nice template for day trading. I'm going to go ahead and take how did the auto scale get on here? It's not on there. Okay. All right, good. All right, so here we go. You can see we went right up to this 3, came back into the 60-minute range. So the 60-minute range and the 300-minute work hand in hand very nicely on the ES, level to level. Somebody was commenting that they really liked this the other day, and I can see why. It's a great template to trade. And we can add that oscillator, which is, our really our huge edge for this is to recognize when we're trading inside or outside these ranges. So I'm going to put my and then my daily. Hang on 1 second. So you just keep adding the instances. So there's the daily one way up there. So you can see how low the volatility was down here, which meant that, you weren't going to be breaking ranges at all. So anytime it got to an outer edge, it was a pretty easy, buy the dip. Once you get outside that daily one, here we go up here, you can see the volatility really increased. And it started hitting our, 2 times and 3 times the range. Because we got up here to the higher volatility. So once you can start, and looky here, went way up 1 time, 2 times, 3 times the daily range. And you could see how big the bars went and how wide they got out. So you can, once you put these concepts together, whether you're, inside the inside or breaking ranges and moving, you can help yourself tremendously with your trading. And then, matching this with volatility, momentum, linear regression, trend. You can't see these wicks, they're so small. There we go. Now you can see it. So just knowing that you're, outside the one with elevated threshold, you don't know where, it's trying to go. Here, it went right to resistance and could not break it. Look at that. They tried, and they slammed them down at the 3 of the 5 hour 3, that 300-minute. And then finally they were able to break it on low volatility. So I think these concepts are going to help you. If you trade spreads for options, there's nothing better than, in my mind, than knowing where these JATS PT levels are, whether you're, inside or outside the threes, and then this is 1.5, or excuse me, um, 2 times and 3 times the range. So there's one, two, three. 1 time the quarterly range, 2 times or 3 times. You hardly ever, ever get into the twos and 3 times the range on a quarterly. In fact, very rare. And here was an instance, and it went to the 2 times the range and rolled over. But it doesn't happen very often. It's a very rare situation. COVID, you know, but March 2020. I need to put more days on my chart. Hang on 1 second so I can get the data series to extend. Oh, that's way too far. Here we go. And went right to the 3 times the range. Look, that was Powell when he came into office. Look at that. Here's COVID. Again, right to our levels. 3 times the quarterly range. These algos are very specific where they go. And they know where these levels are. I was just wanting you to see that. So they don't get hit very often at all. This was a 12-week one, but it's a quarterly level. They're 4, 8, 12. There's three of them. Okay. So here we went up to the 2 times the range. Again, 12-week one. Their little secret when we found it. And that's, one of the great things about JATS PT is you can find these little nuggets like that. So to see where their algos kick in. But otherwise, they stay inside the threes, especially, on that quarterly range. Monthlies also, for the most part. Um, Here, it almost got down to the two and was stopped just shy of it on this monthly three at the bottom. And I think that's a 30 day, yep, 30-day three. So it's really helpful to be able to measure the ranges on these different time periods. Here is a weekly spread, and so you can see that the 2 times range is very rarely hit. Very rarely. In fact, it went right down to it here but didn't touch it. Um, you could probably have a pretty good living selling the weekly too, you know? or, swing trading it. And the daily spread is the one that people love to trade, that 0 DTE. So if we know, again, whether you're going to be inside or outside that 1, 2, or 3, you can use this template. These are threes, and then 2 times the daily range and 3 times the daily range. So if we were to put a daily 2 on the chart to show us what the 1, 2, 3 is, and then add the 1 period to it. Let me load that in real quick. Yellow line, daily, and we're going to put it on the 2. There we go. So you can see here how it went, broke our level. Ooh, look, 1000. That is one of the levels that the algos respond to. Right there to the touch. Um, but you can see how they stay inside the threes, and you were sitting on this 3 line. And let me put the weekly 1 on here on top of it. The weekly, I don't want the month, the week, and put this also in that panel. So here's the daily with the weekly, and it still broke the weekly 3. So we got to add the monthly. Or the 7-day. So let's do what I told you we would do and put the 7-day on here. And then put that on panel 2. And looky here, it went up to the 7-day 3 and came right back down. So I know my levels, right? And I bet if we did go ahead and put a monthly 1 on that, you might be surprised that that was also a monthly level. Monthly 2 maybe. Yeah, look at that. There's my blue 2. So they were sitting on that level. That's where they were pinning it. So having a concept of where we are can help you so much plan your futures or options trading. Again, concept being we're sitting here inside these ones. So you're inside your daily and your weekly ones right here. And once that breaks, that's when you put your risk on the table, or conversely, vol could go long also. Like right here, it went long. You can put your, targets to those outer areas, and look, it went right here to the daily two times the daily range. So this is a fun template for trading options because you're trading with volatility and range together. And so when we put this together with the VIX, like we do in the daily trade plan, we'll have VIX up together with these markets, or NDX next to the NQ. Um, the VIX with the SPX and ES, it's really helpful um, to have this um, chart. So I'm going to save this as a template. So if you would like this template, you don't have to spend the time and energy putting it together. I've just done it, and I will be glad. Here's my daily spread. Just hit me up, and I'll be glad to give you a copy of it. All right, so that's it for now. Let me know if you have any questions. Putting these um, indicators on the chart is not that difficult. You just have to know how many days of data to have on your chart. And for daily, it's 150. Anything like a 5 minute, 15 minute, 30 minute, and a daily distribution, or a lower time frame distribution, 150 days. When you go to a weekly chart, the best rule of thumb is to use 500 days. When you go to a monthly chart, you're using daily data, and you graduate up to 5,000. Excuse me, 3,000. Pardon me, 3,000. 3,000. And for quarterly data, you can use between 3,000 and 5,000. 3,000 is fine. If you want to research data from further back, add 5,000 days, but you don't need 5,000 days to do the current calcs. 3,000. So 150 for daily, 500 for weekly, 3,000 for monthly and quarterly. And that's it. You're on your own and building your own distributions, and I can help you with your templates and your market analyzer templates, and we'll get you on your way. Thank you so much. We'll talk to you later.